Welcome back, YouTube. So in today's video, we're going to be taking a look here at price action. We're going to take a look at the shorts, discuss some of the macros, and get an idea for where Dogecoin is headed next. And we're also going to take a look here at the charts and kind of get an idea of where the kind of like the bottom has so far determined itself to be. But before we get into that, I want you guys to know this video is brought to you by Moomoo. And if you use the link in the description section below, you can get up to 15 free stocks. So getting into the video, looking at price action here, this is why I love charting so much. We got two perfect rejections here off of the 709 mark. And as you guys know, we're literally filling the gap. As you guys know, we've been charting this gap since we first had the gap up in late October, and we filled it on the downside, and now we're filling it in increments, but still very powerful and very bullish trend here headed upwards, and we are in fact filling the gap for the third time. And the projection here, even as far as we're saying that 14, if we look at where the even these candlesticks, these very powerful move downs, we've seen that it is at 11:11 here. The break up was 12, but we actually got rejected from 15 cents. And I know some of you remember that day we had that move up to 15 cents. So the rejection happened at 15 cents. We closed at around 12, but we did in fact hit these numbers and even almost 16 cents here. So this is all a very extreme price movement. This is why I was saying that it's a little bit more difficult to kind of get an idea of price action here, because there isn't really any support, resistance here. It's more so just a very powerful movement that can happen at any second. But the downside to that is it can be in either direction, because again, there's no support. So there's not much resistance to the upside, but there's the con of that being also on the downside. But based off of the trend that we're seeing here, this is literally almost like Doge is like reestablishing itself and filling the gap here on the positive side. And this is one of the things that I was talking about when I said that I believe that going forward, the trends are going to be different from what we've seen in the past, despite what shorts do, because we have that catalyst here with Elon and Twitter. And we know that that's in the work here, and that's going to give investors a different tone from when they're buying and when they're averaging in, because the tone is going to be, okay, well, if this is going to be the explosion before Elon makes that announcement saying that, okay, Twitter payments are ready Twitter payments are ready to go. Even that post that he made the other day, they're saying, okay, I need to be in front of that. So I'm going to hold now or get my coin count ready now. And it's going to be different here, even different here as far as the price action, and a different battle for shorts as well. And that's looking like that's really the case here, how that's playing out. So what we're looking at here is, more importantly, we're looking at price action to see what's going to happen at around 11:13. That's going to be really, now this is still gaps in prices. These are consecutive red candles, not necessarily as strong as these movements, but still indicative of price direction. So we can see these fill to the upside here. So, and we didn't really get a strong rejection. Like our strongest rejection onto the downside, our strongest move down, we're pretty much we've almost filled it, right? So at 11:13, we filled our strongest move down. So we can possibly see less trouble here moving forward, filling this to the upside. And outside of that, this wick here was off of 13.55. So even for us, when we were continuing our trend and we were getting our rejections here on this trend here, this was our pathway to around 17 cents, right? So if we were to re-enter excuse me, that wedge, that would put us at around 14 cents. So if we're pretty much headed to go back up in here and get these price movements, and we fill these breakdowns, that's going to put us at around 14 cents if we re-enter that wedge. So, and it's not out of the norm for this to happen, because again, these are gap downs, and when you don't have that resistance there, all it takes is a positive catalyst, the steady momentum, shorts to back out. We're going to take a look at shorts here in a moment. And you can technically fill these gaps. You've seen it twice now. You've seen it on the positive side, you've seen it on the negative side, and now you're witnessing it on the positive side again. So that's literally how gaps work in charting. So the biggest thing is, obviously, with the announcement from Powell today saying that they're possibly going to back off, these rate hikes in December. That sent the market flying, spied, Dow, everything went to the heavens today. That's bullish overall for the market. So not just the stock market, but overall. And this is why you're going to possibly see some people kind of change their tones as far as to say that whether or not the bottom is in, or how much more likely we are to appreciate or at least settle where we are now compared to having these retracements that a lot of people have been calling for. We're obviously going to have to verify that with like CPI numbers and get some additional concrete data. But typically, yeah, if he's not going to raise hikes anymore and we continue to see this downward trend in inflation and stuff like that, you can technically say that, okay, well, they're going to back off and we could possibly see a U-turn here officially from the Fed. So that's going to be your macro tone here. Another thing we're going to have to figure out is take a look here and see what the shorts are doing and if they're being aggressive. Let's take a look here. Because as like we've talked about, they're going to have to play things differently. And they're not being as aggressive as they were before, but this is very interesting. They're up 2.40% today from market open. And these are similar to like the levels that we saw when they were trying to combat us when we were at around 15 cents or so. So this is, last time we were here on a candlestick was, what was this, October 28th. And I'm pretty sure that's the big day we had on the positive side here. So there's a 5 cent difference in the price of the coin, and they're still trying to use that kind of pressure. Yep. So on that day, we were peaking at around 1503. And they had the similar amount of pressure as ours were in shorts as they did then at around 10 cent, which is pretty much a 5 cent difference here. So the amount of pressure that they're putting on to quote unquote contain Doge or place their negative bets or put the little artificial sell orders into the market is significant, but Doge is still holding and climbing. So, this is, again, certainly a bullish pattern here. The red here, this is obviously it's a new candle forming. It doesn't mean, even if we close downward, we're still, unless we break below, what is this? 996, at least close below there, then we're still technically on a bullish pattern. So this is just a candle forming, so nothing has closed yet. So we're not going to technically count the movement just yet. But overall, this pattern is bullish. You see the yellow line is our 21-day moving average. It's curved. The 50-day, the 72-day, and even the 200-day is now curving again, because we saw this curve here and we had this run up, and now even the 200-day, we're starting to see a slight bend in there. This is bullish movement for the coin. So the biggest thing that we're looking at now is obviously the catalyst and stuff for Twitter, but also making sure that if you are long-term, if you're trading, all that kind of good stuff, either way, I'll say this again until the numbers reflect that a significant people have done this, is the best thing that you can do for your portfolio is to remove your coins from the exchanges. I don't care what they say, who says they're solvent. I don't care what the exchanges say, what type of deals they're offering, staking rewards, all that kind of good stuff. Even if they're having enrollment rewards and stuff, enroll, get the rewards, and then transfer the coins off. Like, it's like, do not hold your coins on there unless you're trading. I understand you have to have access to capital and coins, so that makes more sense. But your long-term position, please remove them from the exchanges. I personally use Ledger. I have a link for them in the description section, and you can order directly from Ledger. And another thing that I talk about on Twitter a lot is people, when they order ledgers from eBay, and all that kind of stuff, they are potentially setting themselves up to get robbed. Make sure that you're getting it actually from Ledger. They're headquartered in Paris, France, and that is the official Ledger. I haven't had anyone say they had any issues saying that they were robbed or had spyware or something on it. This happens when you buy secondhand stuff and you're putting literally your coins and stuff at risk. This is going to work for your best interest for protection long term. So just kind of make sure that you're taking those steps. and having literally that insurance on your coins. It's very important. I don't think that we've seen the last exchange go bankrupt. So we'll cover that at a later date. But you guys know I've been covering the exchanges and shorts and stuff for a while. And I think we have a couple more to go before things kind of smooth out and we have our new leaders emerge when it comes down to where people are purchasing their coins from. But that's a different video. So other than that, looking at price action here, this is extremely bullish. If you are certainly long-term or if you're waiting to trade, the best thing is to get in before that announcement, really, for the announcement saying that the payments and stuff are ready to go. I know some people who are bullish, or I know the announcement here, they're like, oh, I wish it goes back down to around like 7 cents and stuff like that. I'm not saying it can't happen, but trying to time the market, coin count is what's going to matter matter the most, really. When you are looking at multipliers, whether that's to take profit or to trade, that's what's going to matter the most. So it's better to have coins at 10 cents because you were DCing and you're waiting on the announcement versus waiting and saying, oh, I wanted to go down to 7 cents, and then now you're having to buy at 15 cents instead of 10 cents. Countless stories of that. And again, we can see let's see, I will give a consolidation point here. We have two green candles. So if we were to see a consolidation here, we're looking at low 9s if we were to get a breakdown. And after that, we have several rejections here off of the 7-9 mark. So even then, even if we break the next level of support, the support after that is still at around 7-9, which is still above 6 cents and stuff like that. So, I'm not saying this window of opportunity is gone, but what I'm saying is we'd have to break through several layers of support to reach that level. So, do your own due diligence. Obviously, this is just my humble opinion, but do what's best for you. But just know that there are a couple levels of support above that we'd have to break through. So we need something major to kind of get us down that low. So that is my price update on Dogecoin. Please like the video, share it, subscribe to the channel if you want to hear more from me. Also, if you want my weekly trades and my options in the stock market and my weekly Zooms with me, you can have access to that by enrolling via Patreon in my description section. I appreciate all of you. Thank you, and I will see you in the next video.